Welcome back. As promised, let's focus on Arvind Limited. That one put up a steady show in the first quarter. The profits jumped up by close to 35%. The uptick in revenues was around 9%. We're now joined by Punit Lalbhai, the Vice Chairman of Arvind, to discuss the quarter gone by and how things should shape up. Hi, Punit. Good morning. Thanks a lot for joining in. Well, you started off the year on a decent footing, right? It's a 10% growth on the top line, but margins have improved. For the year on the whole, what kind of a revenue growth? Should we be working with mid-double-digit growth? Would that be possible? And also, if you could tell us, advanced material, that didn't grow as much as what your textile business grew. Do you see that picking up as well? Because that would be margin accretive.
So I think at the outset, let me say it's been an extremely challenging quarter because of the global trade uncertainty. And unfortunately, that uncertainty persists. So we are comparing a Q1 to last year's Q1, which was also very challenging for us. So there looks like we have, it's a decent quarter. And actually, given the circumstances, it is a decent quarter. But I expect that the first half of the year will continue to have some of this overhang of tariff uncertainty. However, the second half of the year should start looking much better. As far as AMD is concerned, we are facing a little bit of uncertainty-related holdback on orders, and we expect that to also come back on stream in the second half of the year.
So all said and done, what do you expect for this entire year? First quarter you said was challenging. You did about closer to double digits on the revenue. You said second quarter challenges continue. I suppose even if it continues this way, you could do about double digits. The second half likely to do a lot better. So like Nigel said, mid-teens revenue growth possible this year. And advanced materials, first quarter 350 crores. By when do you reach that 450, 500 crore per quarter run rate mark?
That should happen by the second quarter as far as AMD is concerned. And as far as the company as a whole, the growth should be in early double digits because we did grow quite well.
Okay.
And margin improvement scope from here, if AMD is going to bounce back, then margins could gradually move towards the double-digit mark? Or do you think it'll hover around this 9% odd?
So actually, the margin has been the bigger challenge, and the margin is likely to be the bigger challenge in the first half. So most of last year, we were in double digits. We have gone slightly lower in the first quarter, and that is related to discounts that we had to pass on due to tariffs, air freights, due to order mismatches, and demand uncertainty. So that continues till the second quarter, but third quarter onwards, that impact should be behind us.
So EBITDA margins right now closer to 9%. Do we see them go back to double digit by sometime this year?
Definitely in the second half.
Okay, definitely the second half. So far what we know is that low double-digit revenue growth for the full year, 450 to 500 crore quarterly run rate happens for the advanced textile business from the second quarter onwards itself, and margins in double digits by the second half. Let's talk a little about your textile business itself. We saw growth coming in from denims, wovens, and you are fairly confident about garments growing as well. If you could give us a sense of what proportion of your textile revenues comes in from garments, how much of it comes in from woven, and how much of it comes in from denims?
So, the way to look at our business is that historically we've been a very fabric-heavy business.
Yes.
And only recently have we been vertically integrating the business into garments. So currently garments stand at 20% of the fabric that we produce, we convert into garments ourselves. That number has to go up quite significantly. We would like it to double. And we have a very robust plan to go from about 40 million garments that we did last year to around 60 million in a year, in another couple of years. So that's the kind of investment. The focus on growth in the fashion side of the business is going to come through.
And what is the incremental delta from garments? Say you're making 100 rupees with a 20 rupee contribution coming in from garments. If that 20 goes to 40, which you want to do over the next few years, what would the incremental revenue and concomitantly EBITDA be for you?
So the way to look at it is that verticalization is a result of changing business models globally. So more than the value addition, that that differs quite a bit from product category to category. However, the real reason why verticalization is important is it makes you more strategic to your customers, especially in this kind of protectionist world where there are going to be trade blocks and there's going to be mostly in-country sourcing. And of course, the opportunity to target the domestic market is much better done through full package vertical garmenting route.
Okay, all right. What about debt repayment?
So debt, we feel we are very comfortable at the level of debt we have. We are saying that we have around that 400 crore mark of long-term debt. That we don't want to go very much more than that, and we would like to sort of let working capital remain the way it is at the turns level. So the efficiency of working capital should remain.
So the net debt number that we have, Punit, is around 1,470 crores. So it hovers around this vicinity?
Yes, it's around that 400 mark. It's around 375 or something.
All right. India, UK, they signed that FTA. And, many believe that that's a big potential for Indian producers. For you, what percentage of your revenue comes in from UK? And how big, an opportunity is for you? Where do you see that number headed?
So we are around that 10% mark at the moment, which is not insignificant, but it's also not very large. We believe that this FTA will significantly make India very attractive to the UK. It should double our garment exports at a minimum. And for us, that also represents a very large opportunity, and we're working towards that.
Are you more optimistic about the India-UK FTA, or are you more worried about the India-US trade deal? Because on a daily basis, we get some or the other comment from Donald Trump, and some days it is complimentary, some days it is not. But be that as it may, if it is between 20 to 25% tariffs, do you stand to gain or do you stand to lose?
It will all depend on how the negotiations play out and what relative tariff regime comes into play for India vis-a-vis our competitive locations. Common consensus right now is that India should be at an advantage. However, there will be short-term disruption because of tariffs moving up and down and customers trying to manage their near-term P&Ls, taking decisions to do just that. So short-term, it's going to lead to a little bit of chaos and uncertainty. But at some point, this whole thing will settle with relative tariffs of hopefully in India's favor is what everybody is feeling. But of course, we have to wait and see where everything lands.
All right, Punit, we'll leave you with a promise to join us back as soon as there is some more clarity on the tariff-related issues, and maybe you'd be at a better position to comment on the actual impact of that in the near and the medium term on that. For now, we'll hold on to double-digit revenue growth for this year, with margins expanding in the second half of this year itself. Take a short